Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shameer Sachdev, and some of fintech's hardest-hitting marketers and leaders.
Welcome everyone to this episode of the FML podcast. We're joined today by Lotanna Ezeike, CEO and co-founder of XPO. Glad to have you here today.
Yeah, likewise. Lovely to be here.
Why don't you give us a rundown of your journey so far and how you've ended up founding XPO?
I always say I have two sides to myself, right? I have the fun and the boring side. So for boring side, I used to lead digital for Barclays Bank for UK and I. Leading finances isn't always something that's too fun. Also worked in the credit consumer team as well. Also consumer credit team at Barclays as well. But the more fun side to myself is probably more interesting. I was actually a 200-meter sprinter for England. And that's actually how I fell into content creation firsthand. I actually had, I think I was posting on Instagram about 5 years ago. My coach shouted at me, telling me to run faster and all that kind of stuff. It got a little bit viral. Then brands like Pumas, New Balances reached out saying, hey, we'll do free gear if you tag us. And, as a first-year university student, I'm broke, so I'm just kind of happy to have as many freebies as possible. And a couple of months later, it turns into, hey, what are your rates? How much do you charge? And I'm just like, oh, that's okay. I never knew this was a thing. And I think I kind of picked numbers out thin air. I probably picked like £50 or something back then, and definitely undervalued myself. But £50 went a long way for a first-year university student. That's like a week's worth of meals through there. But then what happened is that, that £50 didn't come until 3 months later. So I just didn't understand the whole concept of, hey, you want me to post this content tonight, but the money's going to land into my account in like 2 to 3 months. It just didn't make any sense to me at the time. So I met my co-founder at university. He ran a successful event startup. So he used to be the person that should take 2 months to pay someone, and I was the person who took 2 months to receive the money. So kind of both sides of the same coin. And then we kind of thought, hey, let's build something to try and fix this. And that's how XPO was born. At first, we started off as a marketplace, connecting brands and creators. And now we focus on actually being that financial back office for these creators, helping them get their payments instantly. And also we just launched a product to actually help them file their taxes, because we actually found creators in the UK, we're talking about YouTube, TikTokers and Instagrammers, are earning over $1 billion a year. But 95% of that isn't actually declared as income. Not because they're hiding or anything at all. It's just, have you been on the HMRC website? You can tell it's so difficult to even navigate through that. So imagine someone who doesn't understand self-employment and all that kind of stuff. So we help them with that too. Our larger vision is to actually be able to underwrite the creator economy. Sounds fancy, but really and truly what it means is that we know in the future there needs to be a data hub to understand how creators earn. Because they're earning a shit ton of money. We're talking about, 2, 3, 4,000 pounds every single month. And we know in the future there's going to be mortgages for YouTubers, credit cards, car insurance, life insurance, all that kind of stuff. And they need to call on some kind of API to refresh their data and make sure that they're up to date. Right now, Experian, Equifax, TransUnion are far too outdated. The data that they have actually diminishes over time because they don't actually understand social media at all. On that end. So we look to essentially become one of the, let's say, a credit bureau for the creator economy. But right now, we're just focused on helping the creators with their finances.
So to the people listening, do you mind spending a few minutes just explaining what XPO does and the solutions that you're providing to the creator economy?
Yeah, so we do two things. So first of all, which is the original thing we did, is normally if you're a content creator and you have a deal with a brand, let's say Nike, for example, they said they're going to pay you, £1,000 for a TikTok video. If you post the content today, so we're talking about March, you're probably going to receive your money around May. And that big lag time of people have bills to pay, right? So you can't just tell your bills to wait 2 months, essentially. So what we do is that the creators come to our app, raise the invoice through us, and then we actually pay out to the creator the entirety of the invoice amount. So we don't actually take a cut at all. So if it's £1,000 invoice, you get £1,000 the next day. We then just wait for the brand to then pay us later in May or in 2 months. That's what we do. That's the first thing that we do. So that really helps the creators with cash flow and actually helps them, with things that are actually important in life. And then number two, we help them with is then taxes. Like we see on average creators on our platform earning about 2.1K a month. That's actually 30 to 50% higher than their 9 to 5 peers, essentially. Most of them are not declaring their income at all. It's not that they have to pay taxes. Some of them are below the threshold. And there's even certain things, for example, if you're a fashion blogger, you can actually write off a lot of PLT expenses. I don't know, as business expense because you're a fashion blogger, that is part of your business. But a lot of people don't know how to do this. And also the UK economy is actually missing out on a lot of income as well from this. And we're helping the creators essentially file their taxes because we do all the invoices and all their payments. We're able to actually see into their bank accounts, see how much they earn, see what the profits look like, and then be able to file it for them if they want to.
So when you say see into their bank account, you're using some form of open banking tool to plug into your platform then?
Yeah. So we recently partnered with Bud, one of the open banking. So I think the most known one is TrueLayer, but we wanted to go for a partner that had way more insights. So Bud had this really cool thing, like a recommendation model, where if you keep tagging their income over time, they could actually tell you, what kind of loan that this person could be pre-approved for, which I think is really, really cool.
You and I sort of first met, it was a bit of an unusual meeting, mind you.
Yeah.
When you first mentioned the idea to me, it just sounded like an absolute no-brainer because actually from a risk perspective, your risk is actually quite minimal because obviously you're owned by the bigger, larger brands. You're actually not taking any risk on the creator side at the end of the day. So, it's one of those sorts of ideas that you think, my God, why didn't I think of that? It's so blindingly obvious. But obviously it's not. With these sorts of things, it didn't go in a straight line. There were a few bumps, and you kind of mentioned that I think one of your articles that you launched XPO sort of 3 times. Do you want to kind of take us through that, what happened there and your learnings from that?
Yeah, so we launched as first as a marketplace connecting brands and creators together. So our job was to get creators more campaigns and more work. We started seeing that a lot of these creators were bringing the external campaigns into our app to kind of do the last mile of payments, which at first, it sounds great. It means how they love our platform. But for me, I'm quite a big data guy. So I literally just call the creators on the phone and say, why are you doing this, essentially? And unfortunately, it wasn't because they loved our platform, but it was actually because we paid them quicker because we had like a Stripe escrow system at the time where we charged the brands beforehand. And they were like, hey, we don't actually bring the bigger brand deals to you guys because big brands don't pay by card to the invoice payment that they do. So they were like, oh, okay, this is interesting. Spoke to more creators and then they were essentially saying the same thing. So that was the first launch. Second launch then was when we pivoted to invoice factoring. And we were actually charging at the time, we're charging 10%. So if there was £1,000 invoice, we'll pay you £900 today. So great margins, which is cool. We had an invoice finance partner, Sonovate, which is amazing. They're great partners to have on that end. But again, after running it for a couple of months, we were increasing the amount of invoices being funded, creators joining our platform. It was nice. However, again, I'm a big data person. I saw that the average invoice value that each creator put through our platform was staying pretty stagnant and wasn't growing over time. And with my experience as being a creator, I know how much these people should be earning. So I was quite weirded out by the discrepancy between how much they actually earn and how much they put through our platform. So again, I just call them on the phone and just say, hey, why are you doing this? And blah, blah, blah. And of course, 10% of 20 grand and 10% of £100 are completely different things. So that's the reason they want putting their bigger invoices to us. And of course, we could do the whole slide and scale thing, which is like, the more invoice value you put through us, the less we charge you. However, we just saw it as a race to zero at the end of the day. We have a competitor, I would say, in the US called WillowPay. They started off at 8%, went to 5%, now they're at 3%. And it's just like it's a race to zero at the end of the day. And with the creator economy, what you don't want to do is build the moat about being the cheapest. That's kind of the worst moat to ever have. And with most invoice factoring firms, people will easily replace you if someone else gives them the same thing. Or someone gives them capital at lesser price, they will move. Essentially, there's no friction there. So we then thought to ourselves internally, what can we do to essentially differentiate ourselves? And that's when we put the price to 0%, so we don't actually charge an invoice factoring side at all. We use that, the cost of capital to us actually then converts into our cost of acquisition for our creators. And then we allow them to do a certain amount of invoices with us for free. After they do that, they need to upgrade the XPO Pro, which we then take a SaaS fee from them, a yearly SaaS fee between 500 to 1.5K a year per user.
I would say it's really, really interesting. The question I was going to ask is, well, how do you monetize in that case if you're not charging anything, obviously, for the invoice financing? you've obviously throughout that journey, you acquired users. I mean, you've done the thing that I kind of preach the most, which is talk to your customers, and you develop the product. And there'll be a lot of marketers who are listening to this thinking, well, how did XPO acquire their users? And that's kind of the bit that I kind of dig into a little bit. Do you mind if I ask? I mean, how many users do you have on your platform at the moment, if you don't mind sharing?
Yeah, so we have about 1,000 content creators on our platform, and about 30% of them are active users. So what we mean by active users, they come month on month to create invoices with us.
And how did you go about sort of acquiring sort of like your first handful, and how have you acquired your 1,000 over the last year or so, is it?
Yeah, it was just under a year. At first, it was really manual, literally just going Instagram DMs and just literally DMing these creators. We actually DM'd so much that Instagram blocked us from DMing people because they thought it was spam. So that didn't really have a great success rate, but we probably got 15, 20 creators jump on after that. Then from that, we did have a referral program, which was, hey, yeah, we provide this invoice factoring service for you for free. But after you do a certain amount of invoices, you have to refer someone to then unlock more invoices to do. I think that was 3 invoices or something. So we got probably our next 30 or 50 from there. Then we just realizing that, ads didn't work for us in terms of it's not a great way to acquire creators because they're such a niche group. And creators are actually used to being the ads themselves, so the propensity to convert wasn't good at all. We found that ads were actually great for brand awareness, but not conversion for creators. So what we then started doing is growing via partnerships, which was actually the great way we were able to onboard hundreds and hundreds of creators at a time because we found that agencies had the same issue, these influence agencies, the same cash flow issue. So we kind of came to them and said, hey, this is a free service. However, a prerequisite to this is that all your creators need to sign up to our platform for us to invoice finance for them. And then that was actually our cost of acquisition coming through there, and that's how we were able to grow. So we're taking more of a Klarna approach in terms of growing via partnerships. We want to be able to say, in a year or two that, all merchants or influencer agencies are already partnered with XPO. So therefore, if you want to get paid quicker, you have to download the app. And that way, that's how you get paid quicker through there. So that's actually how we found, I guess, and also pivoted, right? So it started off with just directly really manual. Then we did a referral thing, which worked okay. Then we went to ads, which didn't work. Then after we just realized, hey, going directly, just where are this group of people in abundance and go and partner with the people that own these communities through there. And that's been the best way so far.
How many creators are there in the UK, and then how do you think you can scale to acquire, obviously, the majority of them?
So just to put some numbers out there's about 300,000 content creators in the UK specifically. And, ARPU at the moment we're getting per creator per year is about £800 we're getting. If we're able to increase that to about £1,000, all we need is 100,000 creators and would be, 100 million run rate per year. So that isn't anything too hard to achieve on that. And so we can definitely do that just here in the UK. In terms of scaling that acquisition, is just investing more in a sales and marketing team. I think that's kind of the key thing there. There's definitely key partnerships that we can do. Stuff like, sponsoring Love Island. It may seem like, oh, why would you do that? But, that's one of the most watched shows here in the UK, especially by creators. Actually, Love Island creates influencers. Once you go on Love Island, you get all those boohoo deals and all that kind of stuff through there. And people look up to that. A lot of creators that are starting up themselves also look up to that through them. So I guess for us, it's partnerships. I know there's different levels, right? So there's creators, there's agencies, there's brands, and then there's platform. So, for example, if we'll be able to partner with TikTok directly, right? What does that mean? TikTok does millions in payouts to creators every single month. If we were able to directly invoice factor for TikTok, what that means is that every brand, agency, creator would have to use our platform to be able to raise invoices through there. So it's about just investing a lot more on the sales and marketing team.
There's really inroads to TikTok then.
I can't really say that.
I had to ask.
Yeah, I can't really say that at the moment, but there's something that's very imminent. It'll probably be announced in the next month or two.
Okay. Oh, we have to keep that in.
Yeah, of course, yeah.
Yeah, and I suppose then sort of scalability wise, if you've got some aspirations to sort of launch out of the UK into sort of new territories, US obviously, I imagine would be on the hit list.
Yeah, for sure. Yeah. I think for us, the next year or two is just fully focused on the UK and only the UK, just because this is an environment that, because really and truly, why most people expand outside of the UK is because they don't have enough of the user base to get to that, that £1 billion status, essentially, in the UK. But we actually have that and more. So for us to be able to get to that first, get that, that notoriety here in the UK, and then for us, it's not about the US straight away. It's actually more of Europe. Just because when it comes to taxes, there's more similarities there. But when you go to the US, it's a completely different ballpark on that end.
So looking retrospectively over the last year or so, kind of knowing what you know now, do you think you would have done anything differently at all?
Yeah, for sure. Like if I knew exactly the best way to acquire creators, I would have definitely done that from the very get go. But at the same time, I guess I learned, the right ways and the wrong ways to do things in terms of, let's say digital ads, right? Digital ads aren't bad. They're just that they're great for brand awareness, not for acquiring the creators. And I guess I would never have known that. And I guess if I found sales and marketing first, I may never have found digital as a brand awareness part because I'm just fully focused just on that. And that may have hindered us later on. Also, in terms of raising investment, yeah, knowing what I know now is just about building those relationships with the funds and in terms of just being very upfront with them and asking them, hey, what the numbers look like that would interest you straight away. Like instead of everyone trying to essentially dance around the elephant in the room, just be like straight away, hey, what's your minimum ticket? What normal equity do you normally take? Have you invested in a creator economy fund before? Do you have an SPV in the UK if they're a fund that outside the UK itself? When's the last time they invested in the UK startup through there? Just get very cutthroat and start forget about the fluff through there. So if I knew that, then it'll be so much easier for me to raise.
And what was the reception with funds and investors for the product?
Reception is great. Yeah, we've had tier one US, top tier US funds reach out to us, saying they've heard about us, and we're just in the UK, wanted to learn more. I'm in close communication with them as well. So they definitely are receptive to it. It's just more about showing that traction because now we've started generating revenue. So it's one of those ones where they just want to be able to see 3 to 4 months of this revenue sustained over time. Obviously, the growth curve coming in before they come in to lead around through there. But it's kind of funny because as we hit that growth curve, we're then even thinking to ourselves, do we even need to raise? Just because the team is quite small. There's 7 of us. And the revenue we get per user is quite insanely high for a normal, individual through there. So then for us, it's kind of like, do we actually need to raise? Or do we need to raise as much as we thought we needed to raise before? Because now we're generating revenue just to see how things go at the moment.
Kind of like digging into the approaching investors and funds and whatnot. I suppose one of the big questions, this kind of came up with in kind of a conversation with Financial, and I kind of asked them if they sort of struggle to raise investment being sort of female founders. Did you kind of enter into any sort of issues or struggles around being a black founder? And did that work for you, against you? Was it an issue at all?
Things kind of started off around the whole Black Lives Matter movement a couple of years ago. And then, that's when a lot of funds started peacocking, I would say, to be like, yeah, we want to talk to black founders, blah, blah. But it's one of those ones where we're tired of talking. It's kind of just get straight to funding wise and just be transparent in terms of numbers that you'd want to see. I think that makes the life easier for both the startup founder and also the investor as well. Instead of being in this kind of loop of just talking all the time. But for me personally, I guess when we first began, yes, there were issues in terms of funds didn't want to take in our pitch deck as much. Or when they got to the team page, I think I actually posted about this, when they got to the team page of it, basically we used a website called Slidebean, which can actually track where the investor stopped looking. And we found that if we put the team page very early on, they stopped looking from the team page. But then if we put it right at the end, then they will read all the way through. And then we did the different variations. Like one of our angel investors, we put him as a founder just to see what it would look like. And this is, by the way, with the same fund as well. And then they would then want to have a follow-on call. Like the entire deck is exactly the same. But I think we put the angel investor as the CEO instead of me. And then all of a sudden we had a corporate partner. I was just like, oh, interesting, even though the deck's exactly the same through there. So there's definitely been that. once you cut through that kind of noise, once you actually create an amazing product, it then becomes easier. And I also believe the further you go through the stage, I think the issue I had was, more sort of pre-seed, seed start of things, where, people, a white counterpart couldn't come with the same idea and go and raise, a 500K family and friends round, and then go on to raise a seed of like 2 million or whatever it is. They're based on just an idea. Wow. I would probably have to prove a lot more for me to get like a 50% of that capital. But I feel like the more you go through rounds, the less it is about skin color or anything like that. It's just about numbers, because at the end of the day, we both want to make money at the end of the day. So I haven't seen it as much now, just because I'm very quick to call bullshit in a lot of these funds. So literally on the first call I have with them, I always ask them about their background, how they got into the fund, to see if they really understand creator economy. If they don't, I literally just cut the call short and be like, unfortunately, it's not going to be a good fit through there. And I think that's the key thing here as well, is making sure it's an even playing field, because it's an even transaction. It isn't you helping me out. It's both of us are banking on each other to help us to go and make more money and change the world in the future.
Yeah, you're right. It's not like you're getting the money for free at the end of the day. You are giving away your equity in your business and your idea at the end of it. So it sounds like what you're saying is that kind of the early opportunities were the difficult part, but after kind of once you made your way through and got the door opened and were able to walk through, the product was kind of speaking for itself at that point, and it can't be really ignored at that point. So, what about the age factor? Because obviously you're a very young guy. Was that equally an issue, or not a problem at all?
I don't think it was that much of an issue. I think it wasn't necessarily about age, but more so just being a first time founder. And it makes sense, right? I mean, they're within their rights, right? It makes sense. You'd rather, put money towards someone who's already founded a company and exited than rather someone that's just begun. So that completely makes sense with that. I don't see any kind of prejudice there. It just kind of makes sense. I would probably do the same on that end. But I think, again, it's just about transparency, really, in the calls that you have with these funds, because some funds will waste your time in terms of they know they're not going to invest, but they're going to just keep on asking questions. They're going to have multiple calls, and then after 2 months, they'll be like, unfortunately, he's not a right fit for the blah, blah. It's kind of like you knew he wasn't the right fit from the very beginning. Just say it, and then we move on. And that's where we don't waste each other's time. Yeah. So I haven't seen age as a huge... in fact, I think maybe may have even benefited from fundraising, not necessarily about the fundraising itself, but more so how to think about ideas. I guess there's some kind of correlation, like the older you get and within a specific industry, the more narrow-minded you can be, because you've known something to be a certain way. However, if you're younger, because you're naive, it's kind of like, oh, why can't this be done in this way? And then, someone who's older may be like, oh, but it's always been done this way. But yeah, why not? Let's just try and see. And I guess that's where you get those moonshot ideas that do really, really well, because it's something that's so differentiated at the time. So I guess it does help sometimes.
Yeah, there's no entrenched thinking.
Yeah,
we've always done it this way, so we'll always continue to do it that way. That's kind of like a beautiful segue into sort of talking about HMRC, incumbent credit bureaus as it stands at the moment. How do they need to evolve? What changes do they need to make, bearing in mind that credit economies, I think it's over $1 billion a year in the UK? What needs to happen there?
Their tech stack is pretty crappy. It's very old and outdated. So, like, most credit bureaus have like 50% of their business is just acquiring companies. That's what they do to try and get as much data as possible through there. So I guess their kind of thing is looking at, what geographies have data that we don't have, and what type of audiences, or what audiences that we have data on that we can also acquire. That's kind of the key thing that they can do. On that end at this point, I don't think they can pivot their business model to understand creator economy, understand social media per se. But I think they can acquire companies, and those companies could be the arms that you then do the understanding and then feed it back into them. So they acquire loads of companies on a regular, so it's not a foreign thing to them at all.
Is that an exit strategy for XPO?
Yeah, so potentially, so we have spoken to one of the credit bureaus who just are interested, like very, very early days, interested in the type of data we're doing and all that kind of stuff. So it's a possibility, but we just need to get to enough scale first. I mean, there's multiple people we think are perfect partners. One of them we really, really vibe with is Klarna, actually. So Klarna making a huge push towards social commerce. And yeah, some interesting stuff coming.
So what's the big plans for Expo over the next sort of 3 to 5 years then? You obviously said next few years is in the UK, but yeah, what after that?
What we see essentially just year by year. So by the end of this year, get to about 20,000 creators. By the end of next year, 43,000 creators. After that, that's more sort of expansion towards Europe and US through there in terms of actually being the finance arm for all these creators and helping them and, their taxes, and then credit becomes a key thing through there. Most likely we'll exit within the next 2 years. I predict, just because the type of user base we have is so niche and it's extremely untapped from the finance angle and also the compliance angle to this. To give you something, for example, right? If a company is going to work with a TikToker called Rachel, they have no clue whether this person has the right to work in the UK. They don't know if the person's underaged. So they just kind of just pay someone's bank account. And that's actually a huge compliance risk for the brand. And so we kind of want to be like, I can explain, quote unquote FCA for the creators, where kind of like we actually fully KYC AML all our creators to know that, hey, this, anti-slavery, anti-money laundering, this person actually has the rights to work in the UK. They have a valid, stay in the UK, all that kind of stuff through there. So that brands can actually feel safe to be like, okay, I actually know the person I'm paying is a real person who has eligibility to work, for example, in the UK, instead of some random persona I'm paying online. So there's definitely different angles to go around things, but we want to be on that industry standard for creators. And I can delve into more detail. There's so many things that happen. So, for example, when a creator puts an invoice through our platform, we ask them for, the contract they have with the brand. Would this shock you to know about 40% of the invoices we get, or let's say the evidence we get, is like WhatsApp screenshots or screenshots of emails. And these are big deals. These are like 3K, 4K deals being on WhatsApp, and there's no contract. If there is a contract, only one party has signed, the other party hasn't signed. It's just a whole weird thing going on there. And, we could do something like, again, we've chatted to Seed Legals as well, because Seed Legals can, automate and generate these documents and just answer a few questions through there. So we'll be working with them soon to be able to actually arm these creators and agencies with simple things to do for them to, hey, this is the creator. It fills out all the information because we've already KYC'd AML them already. Through there, you just click a button. You click a button on that, the creator gets a notification on their app, on the Expo app. They click the button, they sign. It's now a done deal through there. While the other process before was, hey, this is the creator. Let me email them to actually find out what their first name is. Let me now go to this Word document and then edit it and then put the signature, and then put it through HelloSign, and then wait for HelloSign for them to sign it. Oh, I did the wrong name. I have to now redo it again. All that kerfuffle going there. So that's how it currently happens now. And that's why, in the future, it could just literally be, there's a list of creators. They click a button to generate a document that gets sent to the creator. The creator just taps, signs, and now that's a fully legally binding document just right there.
There's so much infrastructure that basically doesn't exist at this stage.
For sure.
Other than yourselves, I think there's probably a small handful of companies that are arguably servicing the creator economy. TikTok has kind of demonstrated that it's going to become more and more prevalent.
Oh, for sure. 100%. Yeah. And again, there's so many different, because some people just say creator economy in general. There's so many different, there's the AML, KYC part. There's, like I said, the contract side specifically. There's stuff we do with agency payments and invoices through there. There's so much to being a creator that even that can be broken down into niches. And there's money management, there's investments. Can creators invest in other creators and earn from essentially like earn from their future earnings, all that kind of stuff. There's a lot of things that can actually be broken down in this niche.
I was thinking like things like insurances, like life insurance, income cover, that sort of stuff. I mean, even insurances against obviously equipment that they're using and all of that sort of stuff as well. Do they have that in place? And even for them and their infrastructure that they're probably using other creators and other freelancers to support them in creating the content. Because we were talking about Mr. Beast earlier, weren't we?
Yeah.
About how many people he's kind of got on the payroll, and we think, well, how many of these creators actually are then, they have multiple vendors themselves, and what does that infrastructure look like? Again, from a legal, financial, and and all the other bits and pieces that we were talking about. But
And I mean, something that's quite cool that comes to mind, right, is reminds me of something like Pipe. So, in terms of, you can actually make creators become their own asset class, because if creators come here, yes, we're getting paid quicker into this wallet that we have within the Expo. Okay, yes, I want to withdraw some of it, but I also want to invest some of it in other creators. How can I do that in other creators? Hey, can I use my actual funds? Let's say I receive £1,000. I want £900 of it. I want to invest 100. Can Expo pool this multiple £100 and then invoice finance for another creator on there? And if they do charge a percentage for this, like a 1-2%, they can actually split that income with the people who've actually pulled together for that other creator. So it gets this viral loop going, because it's now that, hey, the more creators we have, the more we can actually invoice factor through that at a much cheaper rate, interest rate in terms of cost for us, and they're actually helping other creators. And then you can just gamify it, right? Say like a leaderboard to be like, hey, this creator's actually invested in this many creators, which actually allow these creators to earn this amount at a much quicker pace through this. There's a lot that can be done.
I suppose also, if you've got their data points, then you're in a position to understand, is their income relatively static? Is it declining? Is it increasing? And then create sort of risk profiles against individual creators. And then obviously then finance, like you said, like Pipe, finance against that. Are you willing to take a certain level of risk on certain types of creators? It's an untouched economy, really, to a degree.
For sure, yeah. It's untouched, so it's great, but it's also difficult because there's things that haven't been done before, so there's no blueprint to follow per se. Just because even in what they need is very, very specific through there. Again, it's just about listening to customers, because once you listen to customers, the road becomes very clear. It doesn't become easy, but at least you know down the right path to go to.
Difficulty, in my view, is kind of like it's relative. Is that the right word? The value of the business or the business that you're creating is dependent on the difficulty of the problem that you're solving, right? So,
Exactly.
at the end of the day, if you begin to start solving some of these problems, I mean, you're already starting to solve a lot of them, then naturally that's just going to become intrinsic value to Expo. And it kind of goes back to the conversation about, an exit opportunity because you're solving a problem that incumbents can't do, right? So,
Yeah, exactly that. Yeah.
that's brilliant. Let's jump on to we've got like a quick fire round.
Yeah.
I think you'll like it. What song do you have on repeat right now?
It's called My Parimo. It's a Nigerian song. Who's it by? I forgot who's it by, but it's an amazing song.
Cool. What fintech app do you use the most, other than Expo?
Would you say like crypto apps will be
Yeah, that
fintech?
counts.
Yeah. So yeah, like I would say like Binance is probably one I use a lot. Yeah.
Cool. What are you currently binging on TV if you have time?
F1 Formula One. It's the Drive to Survive. It's called amazing. It made me think. Maybe when I get to the age and I get a son, I might, because we have this thing in our community where we're like, hey, we call them Mbappe or the Neymar project, where a lot of people want their sons to be footballers, and they start training from like really, 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 like literally like 1 year old, training from really young. But now I'm looking at this F1 drive, and I'm just like, this looks so exhilarating and amazing. Through there, just to know that there's only 20 F1 drivers in the world ever at a time. So they earn a shit ton of money, but it's also just exhilarating just to watch as well. So I recommend you watch it. It's like I think
Is it on Netflix?
Yeah, on Netflix. Yeah, they've done
Okay,
4
cool, yeah.
seasons, but the new season just came out a couple of days ago, so it's really, really good.
All right, cool. I'll add it to my watch list.
Yeah.
Who in the world of sort of like fintech startups would you most like to go to lunch with?
I'll probably say Justin. Justin, who was the CEO of ClearScore. So that's definitely someone I want to go lunch with. So I've DM'd him over to we've talked a bit just around brokering data and how he was able to navigate that, because it's quite a sharky world. It is over there with the credit bureau. So I'd love to go to lunch with him and just kind of see his idea around things. I think coming close second place definitely be Sebastian from Klarna, just because of what Klarna's doing and how they started off with pay later, but now moving towards the social commerce side of things, which I think is like, it's going to kill a lot of even online stores, really.
Cool. And what's the best bit of life advice you've ever received?
everyone's different, even within your team. So that's something I learned myself, is that the way people take information is very different, and you shouldn't be giving people information in the way that you would best receive it, because again, everyone's different through there. So it's about you trying to learn how it is, and just because someone's different to you doesn't mean that you're better than them at all. It's just that there's a certain way that they receive information. I just confirm that with them essentially. So that's kind of something that's been a key learning for me as well.
Cool. And my last but favourite question. What's one thing that I haven't asked that you felt like I should have asked you?
I guess something that's interesting, was around HMRC. So again, in the next probably 6 weeks, there's something. So basically, there's something called MTD that's coming in 2024. It's going to be mandated into law that anyone who's employed has to fund it 4 times a year. And HMRC are looking to partner with companies, and may have already partnered with companies who tend to a certain demographic through that, to have a direct partnership, so that, for example, if a creator signs up to XPO, we automatically create a customer gateway account with them with HMRC, and therefore, because we've unlocked open banking with Bud, we're actually able to feed to HMRC like the self-employment stats to them as well. So that's something that maybe you could have asked potentially, but I don't think I'd have gone into too much detail.
You kind of answered it anyways. No worries. Lotanna, it's been a pleasure having you on. Thanks for your time, and thanks for coming on the FML podcast.
No worries. Great timing.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk and make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.